All right, welcome to the deep dive. Today we're going to be talking all about AI trading, using artificial intelligence to look at market data and then make trades automatically.
Yeah, it really comes down to trying to get that speed and precision.
And I think a lot of people out there, they hear AI trading and they're thinking, okay, it sounds cool, but like, what does it really mean for me?
How do I actually use it?
Yeah, how do I actually use this?
Right.
Well, we're going to be taking a deep dive today. We've got two great sources: AI trading for beginners, strategies and tools, and AI in trading, strategies, benefits, and implementation.
And our goal really is to try to pull out some of those actionable steps and insights, things that you can actually use.
Right, to move beyond just the hype, all the buzzwords.
Exactly.
So let's start with the fundamentals. What exactly is AI trading? And maybe even more importantly, why should you care? Like, why is this something that's relevant to you, especially if you're just starting out, or maybe you've been trading for a while, but you're looking for an edge?
Yeah, so the basic idea, and both of these sources really highlight this, is that these AI algorithms can process huge amounts of market data.
Like, what kind of data are we talking about?
We're talking historical prices, news feeds, trends that are emerging, and they use that to find opportunities and execute trades automatically.
And this is key because it removes that human emotion that can sometimes lead us astray.
Exactly. Emotion can be a big problem in trading.
Oh, yeah. Fear and greed, right?
Exactly.
Can you give us like a real world example, something that really brings this concept to life of how this actually plays out in trading?
Sure. So let's imagine you've got a Forex AI bot, and it's focused on, let's say, the euro US dollar currency pair. So this bot is constantly gathering data. It's looking at what's happening right now, but it's also learned from years and years of past data. And it started to see these patterns like, okay, maybe there's a temporary price dip, and then historically we've seen it go up. And let's say that the RSI, that's the relative strength index, it's a way of measuring momentum, drops below 30. The bot might see that as a signal and automatically place a buy order. And what's really cool is as new data comes in, the bot is constantly updating, it's learning, it's refining its approach.
That's fascinating. So it's not just static, it's actually evolving with the market, which makes a lot of sense.
Mhm.
But what are some of the, let's say, practical advantages that the sources highlight, the benefits of actually using AI in your trading?
Well, there are some pretty significant benefits. The first one that both sources really emphasize is speed. AI can react to market changes in milliseconds, which is obviously something that's impossible for a human to do.
Yeah, we just can't keep up with that kind of speed, right?
Right.
Exactly. The second one is precision. These algorithms can analyze data and execute trades with a level of consistency that's, again, very difficult for humans to match. Then, of course, there's that elimination of emotional trading that we were talking about before. Fear and greed, they can lead to bad decisions, and AI takes that out of the equation.
Takes the human element out of it.
Right. And then finally, there's the sheer volume of data analysis that AI is capable of. It can look at huge, massive data sets in real time, potentially uncovering insights that a human trader might miss.
Like things that would just be impossible for us to see, right?
Exactly. In fact, one of the sources even calls this the AI trading revolution.
Wow.
It's almost like having a super efficient assistant dedicated solely to market analysis.
Okay, that's pretty compelling. So we're talking about AI as a tool in your arsenal. Let's get a bit more concrete about the different types of AI trading strategies that our listeners should be aware of.
Yeah, so the sources outline several important ones. The first one is called trend following. The basic idea is you're trying to align your trades with the prevailing market trend.
Okay, go with the flow.
Exactly. So an AI that uses this strategy might try to identify established trends and then automatically buy or sell based on those trends. One common example is when a shorter-term moving average, say a 50-day average, crosses above a longer-term moving average, like a 200-day average.
Okay, I'm familiar with that one.
Yeah, that can signal an upward trend, so the AI might buy in that case. Conversely, if the shorter-term average crosses below, that might trigger a sell order.
Right. It's almost like a confirmation, right, that things are moving in the particular direction.
Exactly. And there are tools out there, like TrendSpider, that actually use AI to automatically detect these kinds of technical patterns.
It's doing the work for you.
Exactly.
Okay, trend following. What's another strategy?
The second one is called predictive analytics. And this one's really interesting. It uses AI to try to forecast future price movements.
So it's like AI is making educated guesses about what's going to happen next.
Yeah, exactly. But it's based on a wide range of data. For example, one of the sources talks about this platform called Insight AI, which looks at things like trading volume and even sentiment on social media.
Oh.
And they try to use that to figure out where the price might go and then generate buy or sell signals. And there's even a story in one of the sources about a beginner trader named Sarah who actually had some success trading Dogecoin using a tool like this.
So even someone who's just starting out can potentially benefit from this technology.
Exactly.
Okay, predictive analytics. What's the third strategy we need to know about?
The third one is risk management. And this is really all about using AI to manage risk in real time.
Okay, that's crucial, right?
Oh, absolutely. So, for example, an AI might monitor the volatility of an asset, like, let's say, Cardano, and if it sees that volatility spiking, it might automatically reduce your investment in that asset to try to protect you.
Smart. So it's kind of like having a safety net in place, right?
Exactly. And actually, the sources mention that even big institutions like Goldman Sachs are using AI for this kind of real-time risk assessment.
Wow.
And there are also tools like Kavut's Chi-Score, which uses AI to evaluate the risk associated with individual stocks.
Okay, that's really interesting. So we've got these three strategies. Now, for those of you who are at home thinking, okay, how do I actually get started with this? What are some practical, actionable steps that people can take to start incorporating AI into their trading?
Well, the good news is the sources actually lay out a pretty straightforward process. Step one is to choose an AI tool. There are a bunch of different platforms out there, each with its own strengths and weaknesses.
Right, so you have to do your research.
Exactly. For example, TradingView is great for building and customizing your own strategies.
You could actually build your own bot based on moving averages, for example.
Exactly. Then you have Insight AI, which is really focused on those price predictions for both crypto and stocks.
Okay, so if you're interested in like Solana, you might want to check out Insight AI.
Right. And then there's Signal Stack, which is all about automation. It can take trading signals from other platforms like TradingView and actually execute the trades for you.
Wow.
So step one is really to research these platforms, look at the features, look at the pricing, and importantly, see if they offer demo accounts.
So you can try before you buy.
Exactly. You don't want to risk real money until you're comfortable with the platform.
Makes sense. So that's step one, choose your tool. What's step two?
Step two is back testing your strategy.
And this is critical.
Oh, it's essential.
Yeah.
This means using historical market data to simulate how your strategy would have performed in the past. It lets you get a sense of its potential profitability, but also any weaknesses.
So you can see if it actually holds up.
Exactly. For example, you could backtest a trend-following strategy and see how it would have done during Bitcoin's big rally in 2024.
Oh, that's a good example.
Yeah, and again, there are platforms like TrendSpider that offer automated backtesting features using AI.
That's really helpful.
So it can save you a lot of time and effort.
Okay, back testing. Step three.
Step three is to start small and monitor closely.
Okay, don't jump in with both feet.
Exactly. When you do start trading with real money, begin with a small amount and set those stop-loss limits.
Yeah, those are essential.
They're so important because they'll automatically sell an asset if it drops to a certain price.
To help you limit your losses.
Exactly. So for example, you might set a stop loss to sell Ethereum if it falls 5% overnight.
Okay, smart move.
And the key here is to monitor the AI's performance, see how it's doing, and be ready to adjust your strategy as needed.
So it's not just set it and forget it.
No, you have to stay engaged.
Okay, these are great actionable steps. Now let's talk about the potential benefits and risks. We want to make sure that our listeners have realistic expectations.
Yeah, we've touched on the benefits. Emotionless trading, that speed, that ability to analyze lots of data.
But there are some risks as well, right?
Oh, absolutely. One of the big ones is overfitting.
Could you explain what that means?
Sure. So overfitting happens when an AI bot gets really good at trading on a specific set of past data. It might do amazingly well in that specific scenario, but then it struggles in the live market because things are always changing.
Right, the market doesn't always behave the same way.
Exactly. So the advice here is to back test using a wide range of different market scenarios and time periods. You want to see how robust your strategy really is.
That makes a lot of sense. Don't just test it on the data that makes it look good.
Exactly.
What are some other risks?
Another one is technical failures.
So if you're using platforms that are integrating different tools, like if you're using Signal Stack to automate trades based on signals from TradingView,
Yeah.
you need to make sure those connections are working properly.
Exactly. Any kind of glitch could lead to missed trades or even unintended trades being executed.
That's scary.
It is. And then, of course, there are the market shocks.
Those unexpected events that can really shake things up.
Exactly. These could be regulatory changes, global crises, anything that can cause those sudden dramatic shifts in the market. And AI models that are trained on historical data, they might struggle to adapt to those kinds of unprecedented events.
So it's a reminder that you can't just rely solely on AI. You have to have your own understanding of the market.
Absolutely. AI should enhance your decision making, not replace it.
That's a great point. Now let's dive a little deeper into the technical side of things. How does AI trading actually work? What's the process behind it?
So, at its core, it's a three-stage process. First, there's data input. AI trading systems are constantly being fed huge amounts of market data.
Like we talked about before, prices, volumes, news, even social media.
Exactly. And the quality of this data is absolutely crucial.
Garbage in, garbage out.
Exactly. Then there's model training. The AI uses this data to train its machine learning models to identify patterns and signals. Think of it like this. The AI is analyzing countless past market scenarios and their outcomes.
It's learning from experience,
Yeah,
essentially.
exactly. And then the final stage is decision making. Once the AI is trained, it can analyze real-time data and either suggest trades to a human trader or automatically execute trades based on its predictions.
Okay, so it's not always making the trades itself. It can also give recommendations.
Exactly. And it's important to remember that the accuracy of these predictions, it depends on the quality of the data and the design of the model.
So there's always an element of risk.
Oh, absolutely. Predicting the market is never a sure thing.
Okay, so for our listeners who are really interested in getting into AI trading, what are some essential skills they should focus on to navigate this world effectively?
Well, you don't need to be an AI expert, but it's really important to have a solid grasp of basic trading principles.
You need to understand how the markets work.
Exactly. Things like different order types, technical indicators, the factors that influence prices. There are lots of resources out there, online courses, that can help you build that foundation.
Okay, so education is key.
Absolutely. And then, as one of the sources suggests, you might even want to consider taking some introductory courses in programming languages like Python and the basics of machine learning.
That sounds a little intimidating.
It might seem that way, but it can actually be really helpful because it gives you a deeper understanding of how these AI systems work, and it might even empower you to customize your own strategies down the line.
So it's like taking control of the technology, not just letting the technology control you.
Exactly.
Okay, great advice. So as we wrap things up here, what's the key takeaway you want our listeners to leave with about AI trading?
The main takeaway is that AI is a powerful tool, but it's a tool. You need to use it strategically, and you need to understand both its capabilities and its limitations. It's designed to help you, to enhance your decision-making, not to replace your understanding of the market.
AI can be a great assistant, but it's not a magic bullet.
Exactly.
All right, so for those of you who are ready to take the next step, what are some concrete actions you can take right now?
First, pick an AI trading tool that interests you.
We talked about Insight AI, for example, if you're into crypto.
Exactly. Go to their website, see what features they offer, what kind of educational resources they have.
Okay, step one, check out the tools. Step two,
Backtest a simple trading strategy.
even something basic like a moving average crossover on a demo account.
Exactly. Platforms like TradingView offer those demo accounts so you can practice without risking real money.
Okay, that's smart. Step three,
Start with paper trading. It's a way to simulate trading without actually putting any capital at risk.
build that confidence.
Exactly. And then finally, commit to continuous learning. Keep learning about both AI and trading.
The market is always changing, so you have to stay ahead of the curve.
Absolutely.
Great advice. And on that note, here's a final thought for all of you. With all these AI tools becoming more accessible, how can you find the ones that are the best fit for your own trading goals and your own risk tolerance?
That's the question you have to ask yourself.
Exactly. And that's something for you to think about as you explore this exciting world of AI trading. Thanks for joining us on the deep dive today.
Thanks for having me.